Well, this afternoon, Ghana has received its first consignment of petroleum products assured under the gold for oil deal. Governor of the Central Bank, Dr. Ernest Anderson, confirmed the 40,000 metric tons of petroleum product is currently in storage at BOST. Let's get more on this. Joining me now via Zoom is Stephen Opata. He's head of Financial Markets Department at the Bank of Ghana. Thank you, sir, for your time here on The Pulse. Well, how many metric tons of fuel has arrived into the country? Yes, we know 40,000, but there's a question as to whether or not that is indeed in our reserves.
Hello, and thanks for having me, and hello to your cherished listeners. So 41,999 metric tons has been received so far. This amounts to about 20% of our monthly consumption of diesel. So it's quite significant. It's 20% of what we consume for diesel in a month.
But then overall, how do you anticipate that this is going to impact the economy?
Thank you. So let me begin by saying that our total consumption for petroleum products, that's petrol and diesel, is about 350,000 metric tons in a month. As I indicated, 41,000 metric tons have just been delivered. To the extent that we are able to procure this amount using gold, and the assumptions here or the strategy here is that we are able to buy this at some reduced premium. Thus, we are able to buy the petroleum products as reduced premium or even as a discount. To the extent that we are able to do this, we look at other cost-saving measures in the value chain, then we expect to be able to pass this on to the export prices. So that is how we would like to do this. That, first of all, we are able to negotiate better pricing because we have the goal to support the trade. And then secondly, we are able to reduce some of the costs in the value chain. If we are to do this, then one will expect that we're able to pass this to the export to benefit the end user. From the numbers that I've seen for the first shipment, I think we've seen about 10% cost savings relative to what the prices are right now. So if we are able to do more volumes of this, then definitely it should impact on the export prices. That's the first point I want to make. Secondly, because we'll be using this channel to procure oil, there will be less pressure on the economy for looking for foreign exchange to procure oil. As you know, currently, the Bank of Ghana has to organize bi-weekly auctions where it provides FS to BDCs to meet their anticipated monthly oil needs. If this program is successful, then that pressure that we have to give FS to the BDC auctions is reduced. As a matter of fact, because of this, we've reduced the volumes that we anticipate to do for the FS auctions this quarter. And then we can spend this FS in other areas that are equally needed in the economy.
But then the question as to whether or not it's sustainable. Do we have enough gold in our reserves to sustain this deal?
Okay, so let me, I think, clarify this. Yeah. We are not using gold in our reserves per se. Using gold that we are going to procure from licensed small-scale mines and community mines. Our projection is that we should be able to buy 160,000 ounces from this sector through the Precious Minerals Marketing Company. So if we're able to buy 160,000 ounces of gold per month, you are looking at about 1.92 million ounces of gold. Let me even be more conservative and say that if you're able to do just half of that, that will do about 960,000 metric ounces of gold. Okay, so from the numbers that we've worked, we believe that even using these conservative numbers of doing 160,000 ounces per month, that is about 50 to 60% of our consumption needs. Now, this is just from buying the Gold for Oil program. But as you know, the Bank of Ghana is also buying gold for its reserves. We are buying gold from aggregators, and we're also buying from mining firms. For 2023, we are projecting that we'll buy close to 620,000 ounces of gold through this channel. So one can argue that we can use, let's say, about 30,000 ounces to supplement what PMMC will be buying to sustain the program or to get the program going as required. Actually, if we add our 30,000 ounces from our reserves per month, that alone will be able to sustain 100% of our petrol and diesel needs of the country.
How long will you go on with this?
Well, it's a new program. Obviously, with a new program, you will see how it's going. You will evaluate it, measure your successes and where you have challenges. If it's a program that is going well and it's making sense economically, I think we should be able to continue this for a while. Let me say, and I've heard some of the critics of the program that this will rather put pressure on the exchange rate and so forth. I beg to disagree here, because as I've said, this will we're actually using our gold to augment our foreign exchange needs to meet a very critical aspect of our economy, needs of our economy. So to the extent that we are successful at this, we have less pressure on our reserves. And therefore, we can use that to manage the currency better. We believe that if this program takes off and successfully and builds momentum, it will lead to less pressure on the city. As you know, our petroleum needs are a big source of demand for IFS. So I believe that this is a program that is well thought of and could go for a while. At least we should see for this year, we should use the program and evaluate how successful we are at it.
The direct impacts on the market, when are we likely to see that effect? Because there are concerns that although the program or the first tranche has arrived, we're not seeing that trickle-down effect yet. So when do you project that we'll see the impact, the direct impact of what you're doing now?
Thank you. Thank you. As you know, I think the product was cleared from the port just today. I know that Boss has started selling. And as I indicated, this is just 20% of our monthly needs. So even though from the numbers I've seen, the pricing is better than what is at the ESCOM prices right now, because this is just 20% of our needs, it will not make that much impact as if it were doing 100% of our diesel needs. So let's try it. Let's keep on going this program. As we build momentum and meeting 50 to even 60% of our needs, you will see that it will begin to impact on ESCOM prices.
Are you not worried that some of the OMCs may deploy strategic business opportunities by either hauling fuel or perhaps adopting strategies that may cripple what it is that you intend to do? The fear of sabotage, the fact that the market is bigger than what you're doing now.
Well, on the contrary, what I expect is that the Boss is the government agency that is leading this aspect, the oil part of the value chain.
Right.
And I know that Boss is going to sell to other BDCs and other OMCs. So rather, I think they rather should come on board and be participants in this. Boss is not going to sell all this fuel. It has to sell through other BDCs and OMCs. And because the pricing is good, I think it should fit in with their business model. I don't see this program competing or dislocating what we're doing already. I think as a strategy, what we're trying to do is to find more sustainable foreign access to be able to buy petroleum products. In other words, before we had to depend on dollars, that was sometimes difficult to get. We are saying that now we'll use more of our gold resources to do this. So we are solving a problem. We are not trying to dislocate other businesses that were doing this. So I think they should embrace it and rather work with Boss to be part of the value chain in distributing this fuel.
And people have said that it may be, yes, good for government, but a bad one for producers, considering the fact that they also have to exchange their proceeds into dollars before repatriating that to their home countries. How do you respond to such concerns as well?
Well, thank you very much. So for the part that we are buying from the small scale miners and licensed gold producers, all we are saying that now they sell their gold to us, to PMMC in cedis. So now they are not required, or they are not supposed to export it. So they are paid the market value of their gold, and it's just at market exchange rates. So they are not losing any money here. It's just that now they are not allowed to export. Matter of fact, in a lot of countries, you don't see small-scale participants exporting gold. So what we are trying to do now is to leverage on our resources in a more strategic manner. They will be paid the market value of the produce of the gold that they produce. So no one is cheating anyone here. But all we are saying is that you allow PMMC, you allow PMMC to buy it, and we export it and use it to bring in petroleum products. So I don't think we are taking butter from anybody, the gold producers here, because we are paying them at market prices. But we are paying them in cedis, just like it was being done before. Before this program, a lot of the purchases, or actually all the purchases, were done in cedis by foreigners, mostly foreigners. All we are saying here now is that allow a government agency to do this. They'll pay you at market prices, and that's the end. You don't even, it's not going to affect your profit margins. If we're buying at a discount, then you can say so. So I don't think it's a bad idea for gold producers at all, because they are being paid at market prices, and they'll be paid on time. They are paid on spot.
Right.
So this is good business for them.
And I guess what you are equally looking at for is a corresponding effect on the performance of the Ghana cedi. On the markets as we speak, it's trading somewhere around 13 cedis to a US dollar. Well, you have your own interbank rates. Perhaps you may want to update us on that. But what do you project, and what's the outlook that you're projecting? That after the implementation of this program, say for a month or two, what are you targeting to achieve in terms of the performance of the cedi?
Thank you very much. Okay, so as you know, we're not saying that the performance of the cedi will be based only on this program.
Yeah.
What we said is that we are going to have foreign exchange resources to meet our oil imports. Therefore, there's less pressure on our reserves to look for dollars for BDCs.
Right.
So in that sense, we are having more FS or foreign exchange assets to procure oil. I believe that if this program is sustained, there will be less pressure to look for dollars, and its impact on the cedi will be a stabilizing one. Naturally, having a currency that is more stable. But let me be clear that this is not the only program government or we economic managers are looking at. As you know, we are doing this in the midst of other reforms. And other reforms we are doing, including the IMF reforms, including debt restructuring, are the things that will move us to the next level. In fact, we are trying to do a number of reforms so that we have a better handle on how we manage our cedi. So let me be clear here. We believe that when this program is successful, we will be able to meet more of our foreign exchange resources in terms of procuring petroleum products. There'll be less pressure on the cedi or on our reserves, and ultimately, to the medium to long term, to be more stabilizing for the cedi.
Concerns about stakeholder engagement. The Ghana Chamber of Mines earlier or late, it should be earlier this year, raising concerns about how they were not informed about this project. Initially, the feeling was that they were simply assisting you in shoring up your reserves. Now you'd have to do the gold for oil exchange, which they claim they are not aware of. How far have you gone in terms of engagement with critical stakeholders, the small-scale mining sector, the large-scale sector as well, especially some of these groups that represent them, the Ghana Chamber of Mines, looking at the concerns they are raising? Have you resolved all their concerns, ahead of running this program?
Okay, so thank you very much. I think that we've had extensive engagement with the Chamber of Mines. If you recall, somewhere last year, I think around August and September, of course, led by the Office of the Economic Management team, we agreed on a collaboration with the Chamber of Mines, where they agreed to sell us some quantity of refined gold at established refineries to help provide more resources for our reserves. That program has gone very well. It was a collaborative program. What we sought to do, or I think the announcement that was made by the Honorable Minister of Lands and Resources, indicated that for this year, or they were supposed to sell us 20% of their gold exports. Right. So really, to clarify, this is not new. We had started that with them already, and we've had extensive collaboration. Maybe the 20% is what may be new to them, but we had actually agreed in principle that this year the mining firms were going to sell about 600,000 ounces of gold to the Bank of Ghana. And this is not new. This is collaboration we started last year. We have, based upon some of the news that has come out, engaged them further. And we expect them to collaborate and be on board and agree to share the 600,000 ounces that the industry has indicated that they will sell to the Bank of Ghana. So I think there's been engagement, and we expect the collaboration to continue. I must thank the Chamber of Mines and the mining firms that delivered last year. As a matter of fact, last year our target was to do about 120,000 ounces. I'm happy to say that about 80,000 was achieved. The 40,000 we could not achieve was due to some documentation delays, but there's even commitment that they will do that. So we must really acknowledge the help that we are getting from the Chamber of Mines, and we expect that collaboration to continue.
Any expectations from Ghanaians on how they could support you implement this program properly? Is there any expectations you have of the citizenry as well?
Thank you. So I want to thank your listeners that they must believe or they must support this initiative by explaining what we are doing. What we are doing here is a new way of doing things. We're thinking outside the box to be able to have enough foreign exchange resources so that we can support our imports. But not only that, we are also using this program to build upon our reserves, so that as a country we have more gold reserves. We expect that this year, if things go well, we should be able to add significant for our gold for reserves program. We're expecting that this year alone, we'll be able to add over $1 billion to our reserves from the gold that we'll buy from the aggregators and from the mining firms. Then for the gold for oil program, this can be very transformational because we'll be able to buy quite a significant amount of our petroleum products from this program. What you will see is that the pressure that we've had on our foreign reserves will be somehow minimized. And we ask all Ghanaians to come on board to support the policy dialogue and the discussions so that as a country we are successful.
I thought that would have been the last one, but of course, since you're head of the financial markets, a lot is also happening with respect to the banks as well. You're doing this program because reserves are being depleted. Given that limited amount of the dollar reserve that we have, how are you working to meet the needs of banks and businesses before we get this austerity support from the IMF?
Well, so let me clarify. Most countries will leverage on their exports, and Ghana is a big time producer of gold. Actually, according to World Gold Council, last year Ghana produced 130 tons of gold, and is the largest producer of gold on the continent. We just have to find ways of leveraging our resources to the betterment of this country. Before, a lot of this gold was being smuggled through informal channels. This program we have now, when successful, and we are able to eliminate smugglers and so forth, we have an official channel to use our gold to help leverage our imports. We ask everyone to come on board. But to address your question on the bank, we are of the view that when this program is successful, then our gold reserves will improve. And as a country, we'll be able to have more foreign exchange resources to meet other sectors of the economy, manufacturing, commerce, name them. Because it's not only the oil sector, petroleum product sector that we have to support, but there are other critical needs we have to meet as a country. And ultimately, because we have more resources to do this, we expect the city to be more stable. But you are right, we're also expecting conclusion of a board, the signing of a board approval from the board of the IMF, so that the reform measures that the economic managers are pursuing will gain traction.
I'm grateful that you've been able to join us. Happy New Year as well. Stephen Opata, Head of Financial Markets at the Bank of Ghana.